Hello, everyone, and welcome to week one of BFSG's 2022 fall webinar series. Today, discussing college planning, mostly how to afford the college of your dreams, really targeted at their parents with college-age children, or even the children in high school that are getting ready to plan for college, and things to think about as you start applying for college and financial aid and all those fun things. My name is Chad Narani, a retirement plan consultant here at BFSG. Mostly today, just the host and moderator of today's Q&A session. With that in mind, let me hand it over to Mike Albee for introductions today.
Thanks, Chad. Hey, everyone. I am Mike Albee, a senior portfolio manager, one of our certified financial planners on our team. I've also got Justin Nardo with the BFSG team on the line. I'll let Justin do a quick intro, but today we're excited to have Cole Duncan as well joining us as a guest speaker. I was introduced to Cole actually through a client. I've got two boys, an 11-year-old and a 14-year-old, and I'm starting to early planning of college planning. Time goes quick when you've got kids, and I can't believe I've already got a 14-year-old. So I was just blown away from what the introduction to Cole and his presentation, and so he was honored to be able to speak with us, and we really appreciate Cole being here. So before Cole, I hand it over to you to give your background. Justin, you want to just give a quick intro?
Thanks, Mike. And yes, Cole, thank you so much for joining us today as well. My name is Justin Nardo. I am one of the certified financial planners. I work in the Arizona office, so I get to all the fun weather that you guys don't get to deal with out in the California office there. Prior to working with BFSG, I've worked with some of the Fidelity, TIAA, and Vanguard, some of the larger brokerage houses. We all had 529s, but they were all kind of an afterthought. But for some portion of my career, I did spend it working specifically on college planning, and it's something that is important to me. The education field is important for children, and was to me as I was growing up. So I'm really pleased to be here today. Glad that I can be here to answer any questions. But the person that I think is the most beneficial to you today is Cole. So Cole, why don't you go ahead and give a little introduction to yourself?
Thanks so much. I appreciate it. Hello, everyone. My name is Cole Duncan. I am from the San Francisco Bay Area. That's where I'm based out of. I grew up here. Growing up in high school, I was a big competitive golfer. I played all through high school. I played a lot of junior events all across California. And my family, my friends, myself, we all thought I was going to school on a golf scholarship. But unfortunately, it didn't pan out that way for me. I played a couple of years of collegiate golf down in Monterey before heading down to San Diego for a marketing degree. And my family learned what ended up being a very costly lesson in that process. And that is that there's truly really one guarantee in financial aid. And that is, if you do not fill out the forms, you are guaranteed to get no financial aid. The same forms are going to go in for need-based, merit money, athletic aid, or just a federal loan. After school, I did continue in the golf world. I was a head golf professional. I was an instructor at a facility down in San Diego. And then I transitioned out of golf and a number of years ago, started working with a company called Ketterman College Funding. And what we really do in this process is we work to save families time and money. By eliminating the headaches, the hassles of the administrative side of the financial aid process. We work through a student side of the process on the academic side, helping with career searches, helping with college searches, and also working with the parents on the financial side, making sure we're going through budgeting, putting together cost plans to pay, and also really uncovering and identifying opportunities to maximize financial aid along the way. Next slide. I'm not used to being in control of the slides. Yeah, you can just show it all. So I know this is a newsflash to everyone, but it is going to be expensive no matter where your kids end up going to school. But what we typically hear when families come to us is that public is less expensive and private is more expensive. That's actually not always the case. It can sometimes be cheaper to go to the more expensive schools, and that's something we'll talk about today. Cost of attendance, it's not just tuition. It includes books, room and board, transportation costs, It's every single fee that your student is going to incur while attending school that year. 4 years at some schools cost you around $100,000. At other schools, unfortunately, it's pushed well over the $300,000 mark. I know that's hard to believe. Multiply that by the number of kids that you have. If you are blessed with having more than one child, well, we've also got more than one child's college education to plan for, and you have to incorporate the cost increases, 7 to 8% each year, looking a lot like our inflation right now, unfortunately. But what that really says is what you're paying in year 1 is not usually what you're paying in years 2, 3, and 4. At very few universities, you're going to end up paying the same price for all 4 years of school. Next slide, please.
Oops,
Nope.
my bad.
That's all right. So these are the 3 most common reasons parents give to me when they come to us of why they are not going to qualify for financial aid. The first one I hear is, my income is too high. You'd be surprised at how much money you can make and still qualify for need-based financial aid, especially when we're applying to schools that are costing $60, $70, and unfortunately now over $80,000 a year. Better yet, a lot of parents are having kids close together in age these days, which means they're going to end up being in school at the same time. We don't necessarily foresee them going to the same school, just the fact that they're going to be in school at the same time. They're actually going to reduce your family contribution by 40 to 50%. So let's say that they thought the family could afford $10,000 a year. Well, they're not going to say 10 and 10 because that wouldn't be very nice. And they're usually not nice enough to give the 2-for-1 special, which would be a 50% reduction. But let's say they do reduce it by 40%. In this example, $6,000 for number 1, $6,000 for number 2. It's a little more money in the short term, but over the long term, you do end up saving a lot of money by having those kids close together in age. In recent years, the Ivy League schools, they all changed their financial aid policies. A lot of parents wondered why they did that. And the fact is the IRS came in and they said, if you don't start handing out more money, well, then we are going to start taxing your huge endowment funds. Of course, they instantly rolled out new policies because nobody likes paying taxes. So if your student gets into an elite private school, an Ivy, and you make less than $65,000 a year, they will go for free. Some schools have bumped it to 75. If you make between 65 and 100,000, that's free tuition. Our local Stanford here in the Bay Area has bumped that number all the way up to $150,000. But what if you make over the 150? Well, they count that against you at about 10%. So let's say you make $180,000 a year. Well, a school like Stanford is going to charge you about $18,000 to go to school there, which would actually make it cheaper to go to Stanford, which is a $78,000 school, than it would be for us to just drive right across the bay to UC Berkeley. So before you take a school off of the list, find out how much is it going to cost you. Here in the Bay Area, we do have a lot of families who make money up here. They're not going to qualify for need-based aid. But again, the same forms going for need-based, merit money, athletic aid, or just a federal loan. Grades too low. Well, need-based aid is based upon a family's need. Now, some of you, if we have parents on here, hopefully we have parents on here. Some of you parents might be thinking, my child has good grades and good test scores. Well, that helps us out with merit money. We get the third one a lot here in the Bay Area. We own a home and we're sitting on a lot of equity. Does that count us out? Not necessarily, because the government has 2 ways that they calculate the family contribution number. If you apply to a school that requires the FAFSA form, they use the federal methodology and they do not look at your home equity whatsoever. If you apply to a school that requires the CSS profile form, they use the institutional methodology and they will look at your home equity and in some cases, retirement accounts. and they will assign a weight to those. Your family contribution can differ, and typically it does, from a school that only takes FAFSA to a school that also requires the profile form. It is an easy process. Not as easy as it once was. That is certainly the fact. But you know, in the end, there is a process, and you have to go through that process in order to qualify for these programs. So this is how to determine if you are eligible for any need-based financial aid. So they're going to take the COA, that's the cost of attendance at that particular school, tuition, books, room and board, transportation costs. That could be $25,000 a year up to over $80,000 a year based on that particular school. They're going to subtract your FC, that's your family contribution. Unfortunately, you don't get to calculate this number yourself. They say that they'll be nice enough to calculate that one for you, and chances are the number that they come up with is going to be larger than the number that you came up with. But there's 131 equations that go into calculating that number. We are working on a bit of a time crunch here, so we're going to use a Cliff Note version. They're going to look at your income. How is your income positioned? Is it business income? Is it W-2 income? How are your assets positioned? Do you own a home? Do you own a rental property? How many are in the family? How old are you? How close to retirement are you? Do the kids work? Do the kids have assets in their name? Will they be in school at the same time? So all of those things will go into calculating the family contribution number. So they'll take the cost of attendance, they will subtract your family contribution, that equals your need. That's how much need-based aid you would be eligible for. And in a couple minutes, we're going to plug some simple numbers into that equation so everyone can get a feel for how this really works.
Hey, Cole, I have a quick question on that family contribution. Have you seen them get that wrong, and can you appeal that, or is that just, it is what it is?
You can make corrections to a FAFSA. We're in forms processing right now. Some families have gone in and reported some assets or grandparent assets that they didn't need to. So you can go in and make corrections.
Okay, great, thanks.
Mm-hmm. So there are different types of financial aid that is available out there. Federal student aid, Pell Grants, that is a federal program reserved for very low income families, available at any school, and it's dependent on what your expected family contribution is. You have to have an EFC under 5550 to qualify for that program. So again, that one is reserved for very low income families. There's state aid programs here in California, and this is on a need-based level. We have the Cal Grant program here. It's an incredible program for California families. I know we have families from across the country on today. Certainly check with your specific programs in your state. School aid. So I want to talk about the difference between these. At public schools, you're looking for federal monies. Pell Grants here in California, Cal Grants. The schools themselves don't have a lot of money to give out. Normally they're underfunded. They don't have a lot of cash reserves to be giving large awards. But when we look at higher end schools that have the endowment funds, need-based, merit-based grants, those can come directly from the schools. Scholarships, this can be on a need-based level, can be on a merit-based level. And so it's important to understand what types of aid each one of these schools give out, and what amounts of aid do you believe, do we think your family can actually qualify based on your expected family contribution numbers. Next, nope. So different types of financial aid forms. The FAFSA, I think we're all familiar with that one. That is the free application for federal student aid. That is basically the gatekeeper to all types of financial aid, whether it is need-based, merit money, athletic aid, or just a federal loan. That form is going to need to go in. A scary statistic is a majority of those forms do come in with those errors and inconsistencies, which is why you'll see such a huge amount of money go unclaimed each year. Roughly 70% of the $200 billion in aid actually goes unclaimed each year. And the reason is, first off, a lot of parents out there who make a significant income, they don't bother filling out the financial aid forms. And then a lot of families also figure out that financial aid offices are sticklers for on time and accurately. The first day, as you can see, to file a FAFSA form is October the 1st of your child's senior year. Now, the last day to file that form is March the 2nd. If anyone's taking notes, let's write down the October date. This money is given out first come, first served on a need-based level. And so we don't want to wait all the way until the deadline, because what happens is let's say we do fill out the form. We send it in and there are errors and inconsistencies, and that form gets sent back to you for corrections. Well, as you're working on it and sending it back in, it's going to take another 4 to 6 weeks to process oftentimes. Well, all during that time, other families are sending their forms in, they're being accepted, and they're getting their aid distributions. So we want to make sure it's done properly, submitted on time, just to maximize your financial aid opportunities and get the best awards. If we did wait all the way until March and there were some issues with it and it got returned, you actually could miss all of the deadlines and then not be eligible for anything for that particular year. There are about 300 schools out there that take a second form. It's called the CSS profile form. And chances are, if you didn't like going through the FAFSA form, I can pretty much guarantee you're going to hate the profile form. All of the Ivy League schools do take this form. Very few public schools require it. The one that always comes to mind is the University of Michigan in Ann Arbor, Big Blue. Not sure why they take it, to be honest with you. I think they see themselves as one of those elite private schools. Like to be a little different out there. We do have 10 schools here in California, Santa Clara and Stanford locally here for me, USC, Caltech, Occidental, and then the 5 Claremont schools do require it. The FAFSA form is, of course, free, as the name implies. They did get away with charging for the profile. It's $9 to register. It's going to be $16 per school you send that form out to. Parents don't complain about the price on it. It's a lot longer. It has sections A through Q. Q is always the fun one. That's where each school gets to ask their own individual 25 questions out of a list of 700 possibilities. A couple years ago, they did overhaul the form, and to be honest, we got a little excited. We thought they were going to simplify it. But unfortunately, what they did is they took a bad form and they made it even worse. So on a good day, that form is going to be 180 questions. But if you own your own business, if you get a 1099, if you have a rental property, get a K-1, think of your form being 220 questions or more. If a school does take a profile form, they're still going to require you file a FAFSA. Whatever goes on the FAFSA needs to be consistent with what goes on the profile form. The profile will ask about home equity. They'll get a more detailed explanation of your income, your assets, and your expenses. Again, family contribution can differ from a school that just takes FAFSA to a school that also requires a profile form. There are a lot of schools out there. Once you've completed those two, there's a lot of schools actually that have their own set of forms. Institutional and verification forms, whatever goes on these needs to be consistent with the others. We see a lot of confusion on the FAFSA when we have a split household family. What if mom and dad are divorced or separated? Well, whose information are you going to use on the FAFSA? Let's say the child lives with dad. Well, does dad's information go on the form? Yes, of course. But the bigger question being, does mom's information also get put on the form? No, mom's information does not. It's whoever the child lives with 6 months and 1 day of the year. It's physical custody here in California. If custody is split 50-50, right down the middle, well, you get to choose whose information to use on the form. But mom's not off the hook. We just got done talking about the profile. There's about 300 schools that take it. A little more than half of those schools have what's called a non-custodial parent form. And if you apply to one of those schools, well, mom's information will be going on that form. Now, what if dad got remarried? What if there's a stepmom in the equation? Does stepmom's information go on the FAFSA? Yes, stepmom's information does go on the form if the child lives with that custodial parent.
Before I move on, Cole, we're going to post in a chat too. We did a blog recently on FAFSA and just the submitting that. And one other thing, just you need to submit that every single year to be eligible for financial aid. It's not just a one-time thing. So going through that process is excruciating, but you've got to do it every year that you want.
And a lot of parents think they just do it once senior year, but in order to maintain that aid eligibility, freshman year for sophomore year for junior year for senior year. And if you're a need-based family and there's a significant change in income, whether that's for the better or for the worse, they can change the following year's aid package.
Yep.
So I did just paste that also. I did just paste that link to the chat box. It is an interesting read that gives you some links and resources if you want to apply for FAFSA. Before you guys leave the forums page, a question did come in, and I'm going to leave most questions to the very end, but this one I think is very timely on this page. You're talking about just like 300 schools require this versus that. Do most of the schools have a section on their website where they list the forms that are required for aid at their institution?
Correct. You can go onto any school's website, go into the financial aid tab, and they're going to tell you what they require. Just as a distinction, FAFSA is most of your public schools in the country. The CSS profile is reserved or not reserved, but used at mostly elite privates. That is Ivies, privates who think they're Ivies, and a lot of liberal arts schools.
Cool. I wanted to just kind of ask a question. I know this was always something that came up when I did a lot of the college planning. What happens if you wanted to change who filed the FAFSA?
You mean like
custodial parent changes? Now dad wants to do it versus mom or vice versa.
It's a lot easier to do it right the first time than it is to backtrack once you've already disclosed all your information of a household to a college.
So every other year, don't be changing, basically. Whoever does it the first year needs to do it all 4 years, most likely.
Correct. You want to establish whose information is most advantageous. What is the family contribution on this side versus this side? What's going to look best at the schools that we're going to? So, that's one reason we do a financial analysis for all of our families, is because we want to establish what your numbers are. And if we're going to work with a split household family, then we're going to make a recommendation whose information to be using.
Yep. And this is mostly, I don't know either, actually, is you talked about FAFSA being filed every year, right? Mm-hmm. For all 4 years of school. Does that apply to these other forms like the CSS, et cetera? Is that also every year you need to file those?
Correct.
Got it. Cool. Thanks, gentlemen.
Yep.
So how to pick the schools? How do most students pick schools? We meet with our students pretty frequently, and I can tell you what I hear. So first, it is typically location. Then it is location. And most commonly, you guessed it, it is location. And that could be close to mom and dad, or sorry, parents, maybe they want to get far away from mom and dad. Could be close to the beach, the mountains, the city, maybe the girlfriend, the boyfriend, or the friends. Then I hear major, which is always a good one, athletics, reputation. There's a lot of good ways to pick a school. But what if I told you, let's pick the school that gives us the best financial aid package? Would that be a good way to pick a school? Now, if you're like me, you're shaking your head saying, no, that is not a good way to pick a school, because what if that school doesn't have their major? What if it's not the right academic fit? What if it's not in a location they want to be in? Let's go through a really quick exercise. Let's say we have a list of 6 schools. All 6 of those schools are highly competitive with one another. There's not really one of the 6 that stands out from the others in a crowd. But what if one of the 6 costs an extra $10,000 a year? Are you willing to pay an extra 10 grand a year for a school that is not better than the other 5? And if you're not sold on that concept, well, what if that one school happened to be a safety school? And so a college list is made up of reach schools, target schools, and down at the bottom, we have safety schools. A safety school is basically, if I don't get in anywhere up here to my top choices, well, I guess I'll go there. Are you willing to pay an extra $10,000 a year for a school that is the, I guess I'll go there school? Without exaggerating, and this just happened this week to me, typically when a family comes to us and a student comes to us with a list of schools, I would say 70–75% of the time, schools 10, 11, and 12 are actually the most expensive schools on their list. And this is how we determine that. Next slide, please. So the real cost of college, some schools out there meet 100% of a family's financial need. Others will only meet 30%, 50%, and even less sometimes. And you really do need to know these statistics before choosing and applying to schools. So we plugged some really easy to work with numbers into that equation we looked at a few minutes ago, so everyone can get a feel for how this does work. So cost of attendance at this school, we're showing $20,000 per year. This family's contribution, FC, has been calculated out at $5,000 per year, leaving their financial need at $15,000 per year. This school, if you can see on that second line, only meets 50% of a family's need, which means they are going to satisfy $7,500 of it. But where does the other $7,500 go? Because it doesn't disappear, unfortunately. What it does is it gets tacked right back on to the family's expected family contribution. So the new family contribution for this family at this school is $12,500. Now, I always pick on a couple schools in my webinars. The first school I always pick on is a fantastic school, first of all. Very popular school. I see it on lists all the time. NYU. NYU has one of the best theater programs in the entire country. But can I find 5 schools that compete with NYU? Easily. Juilliard, Yale, Carnegie Mellon, USC, UCLA. The problem with NYU, it's also one of the most expensive schools in our entire country. It is now pushing $80,000 a year. Most schools at that price point will meet 90 to 100% of a family's financial need. NYU does not. They meet 62%, which means a lot of parents will pay an extra $10,000 to $20,000 each year just so their student could walk through NYU's doors. There's a lot of schools in this country that meet 90 to 100% of need. But wouldn't it be nice to know how much they're giving in free money, money you do not have to pay back, and how much they're providing in self-help programs, which are your loans and your work study programs? This is information we need to know before choosing and applying to schools. Next slide. So the second school I will pick on is, I see it on a fair amount of lists, the University of Arizona. U of A meets 100% of a family's need, which at first sounds pretty amazing, but only 30% of that money is actually given in free money. And the 30% they do give out is usually saved for kids who live in Arizona. So we here in California or any other state in the country, the first thing we're going to get hit with is the out-of-state tuition costs. And then they usually save all that free money for the kids who are living in Arizona. So we're going to get stuck with all the loans and the work study programs. So where are those safety schools that we talked about earlier? So for us in California, typically number 10 is an Oregon school, 11, an Arizona school, and then school 12, Colorado Boulder. Colorado Boulder is a popular school. And I feel like there must have been a rumor that kicked up, years ago that everyone gets in at Boulder. And the first thing I'll tell everyone on today is Everyone does not get in at Boulder. And does anyone know what it costs to go to Boulder now as an out-of-state student? It's pushing $60,000 a year. That makes it as expensive as a lot of private schools. But the difference is private schools have a lot more money to give out. What else aren't parents considering in this process? For all of you who maybe have kept up on college news, read it on your news feed on your phone, how long are they saying it takes to graduate from a public university in this country today? 5 to 6 years. Our UC system here in California are 5-year schools. A lot of our state schools, the CSU system, they're 6-year schools. Well, why is that? Well, it's budget cuts, over enrollment, and cutbacks. Students just simply can't get the required course loads in order to graduate on time in 4 years. I can attest to this one because sadly I went through it. I went to San Diego State, and this was, well, longer than I'd like to admit ago at this point, about 25 years ago. I was a business major. It's a very competitive, well-regarded business program. When I got to upper division, my first semester in the business school, I was able to get one of my required courses, one of them. And you ask, well, why is that? Well, I went on to register. Every single class was full. I showed up on the first day of class. I tried to crash everything. There were 50 to 100 students waiting to do the same exact thing. I was able to get one class because I refused to leave that class until that professor added me. It was going to take me almost 4 years to get through a 2-year business program at that rate. Now imagine sending your student to an out-of-state public school. Situation may or may not be better than ours here in California. You're stuck paying out-of-state tuition costs, little to no free money, and the possibility of a 5th and 6th year of tuition, books, and room and board. A lot of the times the private school that they took off of the list in the beginning of the process would have actually ended up being cheaper than the schools that they left on the list. So again, before you take a school off the list, find out what is it actually going to cost your family. Next slide. So can you negotiate for the best financial aid package? The first thing I'll tell everybody on here today is don't use that word. Negotiate for some reason is like a bad word in financial aid. So I would tell everyone to replace that with appeal. I know that means the exact same thing. They just like the way it sounds better. So we can appeal offers. If they give you a really good offer, do not go back to them. Try to squeeze them for some more money. We've had some families do that over the years. And you know what those colleges actually ended up doing? They ended up taking some money back off of those offers. So you need to know if it is a good offer before deciding to accept it or appeal it, because some schools do mis-award students, some schools under-award students. I always want to make sure everyone understands this one. If we have a student who gets into a reach school and their grades are down here, they're going to under-award you. That is not the student that they are going after. We need to find a school that's a good fit for 2 reasons. First off, your student's going to be happy there. They're going to do well at that school. They're going to graduate from that school. And then secondly, usually the better academic fit is also a better financial fit. They go hand in hand. Early decision. If you go early decision, it's basically like going all in on a school. Those are nearly impossible appeals to win, because when you go early decision, you're actually going to sign a binding letter that says you will come. And not only will you come, you're actually going to withdraw all of your other applications. So the school has virtually no incentive to give you their best offer because they know you're showing up either way. Now, some schools will try to compete with one another for desirable students. So a couple years ago, we had a student got into 4 schools, got merit awards from all 4 of those schools: USD, Chapman, Pepperdine, and Loyola Marymount. Now, the school that offered by far the least amount to this student was Loyola Marymount. And of course, where did that student want to go? LMU. So we wrote a letter, the appeal letter for the family. They read over it, mailed it into the school. And a couple weeks later, we got a call from them. And they were honestly in a panic. They said it didn't work. It didn't work. We said, okay, let's just read us the letter. And it said, we do not compete with others. We do not compete with other schools' offers. Further down that list or that letter, it said, we will forward this on to the correct person. So we weren't overly optimistic at that point, to be honest. So we wanted to kind of choose our words carefully, but we told the family to hold tight. We said, don't respond to that letter. Don't call them. Don't drive over there. Just hold tight. A couple weeks later, they gave us a call back, and they were singing a very, very different tune, luckily. They were extremely happy. They were extremely thankful. And we said, wait, what changed? They said they matched our top offer after previously saying they would not negotiate. So you need to know if it is a good offer before deciding to accept it or appeal it. Next slide.
Well, I have a question for you on that. Say you have a decent offer and the appeals process, probably want to appeal as soon as possible, because if it is first come, first serve, is there a potential you could lose something just because it wasn't available again by appealing, or how does that work with that piece?
Well, there needs to be a reason for the appeal. We can't just appeal to appeal. And so, one of the grounds for an appeal is if something in the family's financial situation changes. If we have an offer from a competing school, then we can use that and go back to them. But the problem is a lot of families, when they get an offer from a school, you don't know if it's a good offer or if it's a bad offer, because you don't actually know what that school typically gives out as far as their financial aid. So, a lot of families, they appeal just to appeal, but 9 times out of 10, those aren't going to work because there's no real grounds for an appeal. Does that help answer your question?
It does. I just don't want anyone to ever appeal something and then potentially lose like a federal aid because to that school because there was a time restriction or it was
no federal aid is very cut and dry.
Okay.
It's you either qualify it or you don't based on your family's financial situation. And like the Cal Grant here in California, you have an income and asset threshold based on your family size and a minimum GPA of 3.0 or higher. If we don't check those 3 boxes, there's no appealing, right? If we don't meet those 3 criteria and fall within the framework of the program, we can't go in and back and appeal. On a Pell Grant, if we don't have an EFC under 5550, there's no appeal to be made. And so the appeal is more to the school than it is to to one of those specific programs.
So what we're saying is when we are appealing, we're looking to appeal like a package from the school's financial aid portion, not anything federal or anything like that. What is there
Exactly.
will be across. If you get the Pell Grant at one school, you get it at all schools that you're going to.
Exactly. And the Pell Grant is sent directly to the college. And when you get your final financial aid award letter, it's going to be listed in there as a grant. So it does seem like a lot of families out there, they only fill out the forms for need-based financial aid. But again, the same forms, need-based, merit money, athletic aid, federal loans. If that doesn't convince everyone on the call today to fill out the forms, maybe this will. By not filling them out, what you are basically telling the schools is that you do not want anything from them. Your job is secure, you will not get sick, nothing unforeseen would happen to your family. Obviously, the last 3 years have been tumultuous, to say the least. There's been a lot going on in our world. And we wrote 3 times the amount of appeal letters we would in a normal year the last 2 years. And again, one of the reasons for the appeal, as I just mentioned, is if something in the financial situation changes, something in the family dynamic has changed. Now, we had some incredible success the last 2 years with appeals because of all these happenings in the world with our families. We got an additional $8,000 a year at Occidental, $12,000 more per year from USC, 28,000 more per year at Chapman, 30,000 more per year at Syracuse, and then our big one was $36,000 more per year from Duke. And so this is why we always tell parents that it's so important to fill out the forms each and every year, because in the end, the form is a safety net. It's an insurance policy, because if something does happen when the student is at school, let's say the student goes off to school, we didn't get anything the first year, but while the student is at school, one of the parents loses a job, or there's a death in the family, or something happens. If the forms haven't been filed, nothing is going to change. And so we need to get those forms in, because it's truly an insurance policy during the time that the student is at school. Next slide. So some of the folks on the call today may be looking for some help. Hopefully we have some families out there that do have high school age students. These are some questions and things that a college planning specialist should be helping you with. First off, they should be doing some income and asset planning. What that means is they should have read the Higher Education Reauthorization Act. That is the rule book to financial aid. They should work to help you improve your situation and bring your financial your EFC down. They should help to put a plan together to get all of the kids through school most cost effectively. They should select the best schools. And that doesn't mean the best schools in the country. It means finding the best schools for your student and locations they want to be in, a good academic fit with their major, schools where they're going to be successful. They're going to do well. They're going to graduate. That is the number one goal in this process. Come out with a degree. Thirdly, they should fill out all of the forms. So all of the financial aid forms that we've discussed today, those should be completed on your behalf if you're working with someone, because they do need to remain consistent across the board. And then they should help appeal with the school when there is an opportunity to do so. It needs to be a competing school, like the example I gave a few moments ago. Will it work? We can't take an offer from UCLA and go up against Stanford. One is a $37,000 public school, and the other one is an elite $78,000 private school. They don't compete for students. So will it work? Next slide.
I disagree with that being a UCLA grad.
Well, UCLA certainly is behaving like an elite private school these days. They got almost 150,000 applications for their freshman class last year at UCLA. It has become our UC system, and this is really sad for our California students. The premier locations, Berkeley, UCLA, Santa Barbara, UCSD, they are true reach schools for every single student out there. And it is almost as hard to get into UCLA these days as it is to get into Stanford.
No.
It's really unfortunate, because the public school system is supposed to give access to affordable education. Not the case really anymore. So when is the best time to start planning? We usually say before January 1st of the sophomore year, or as early as possible. The reason we say this is, so junior students right now, those are 2024 graduates. That means the financial aid forms go in October of 2023, which means it's based on your 2022 taxes. So it's a great time to start planning, because we're in those families' base year right now. They always go 2 years before graduation. That's what they look at for financial aid. So 2024, they're looking at 2022 for freshman year. It's a great time to start, because we can really go through a process with the student of identifying, going through a career search, college search, but also working through the financial part of the section, and making sure that our families are really prepared for what these expenses are going to look like. Sophomore students are 2025 graduates. 2024, the form's going in October, which means it's based on the 2023 1040. You know, what used to be our average family that we started working with was a junior family. But, you know, more year after year, I would say the last 5 years, sophomores, freshmen are our most common families who come into us. And the reason really is first off, it's getting more expensive each and every year. And the only way to truly hedge against those costs is to start planning earlier. And then the last 2 years have also been the most competitive years to get into college. There's more students applying than ever. Those students are applying to more schools than ever. So it's increasingly more important to start planning earlier because, you know, first off, we need to figure out how we're going to get into these schools. We need to put together the right list of schools for that student. And then lastly, for our program, I think a lot of families who we work with and I speak to, they've kind of figured out that, you know, for our program, we charge the same price, whether we start working together in the 9th grade or we start working in the 11th grade. We just get longer to work through the process, but it is a different process. With juniors and seniors, it's showing them what schools they can get into and really saying, hey, these are the things that we need to be doing right now. Whereas with freshmen and sophomore students, it's showing them what schools should be on the list and really coaching them over the coming years of what they need to be doing to give them the best opportunity to position themselves and the best opportunity to get into these schools. Next slide. I think that's my last one.
Yeah, thanks, Cole. So we're going to touch on, Justin and I are going to hit a few slides on saving for college. We do have a webinar we presented, Chad, about a year ago on college education. And so that I recommend, Chad, if you can post that in the chat, our YouTube replay on that. That goes a lot deeper into saving for college, but we're going to hit a few slides. But like Cole just mentioned, I mean, starting early for the planning, you should start early for savings as well. And really, I mean, with your child's birth, I think Albert Einstein said it best: compound interest is the 8th wonder of the world. What these two charts are showing is just, I mean, how you can reap rewards the earlier you start saving for your kid's college. The chart on the left is just showing if you hypothetically put $350 a month, what that value would be, assuming 6% annual returns, starting at various ages from newborn to age 10. The chart on the right is showing, again, just a different way of saying it, how much you have to save if you delay. So save, again, $387 a month at newborn, or do you wait till age 10 and start saving almost $1,200 a month? So again, start early on the planning process and on the savings process for college education. So there are, I mean, various savings plans out there for college savings. We have a few listed here, 529, a Coverdell, and then a UTMA or UGMA account. You can see some of the differences there, but I mean, in reality, a 529 college savings plan is really we believe is your best option for college savings. There's no income limits. Anyone can open an account, a grandparent, a parent. There's no restriction age of the beneficiary. And then the savings, the contribution limit is the highest as well for 529. Each state has their own aggregate limit for 529 plan contributions. Listed on this slide is California's, being 529,000. So, but again, you can, I mean, and you can super fund it too, all at once, the first 5 years of that. So there's huge advantages of 529 plans, and Justin's going to get into a few of those in a little more detail.
Thanks, Mike. So the advantage of the 529, there's, as Mike was saying, it's just it's first and foremost for us. I think when we look from a planning from account opening perspective, we don't have to sit there and worry, did I make too much money this year? You know, those things aren't there. They're very flexible. too. You have the ability to, if you don't use all the money, there's you don't have to, you can maybe transfer to another child. There's things that you could do there as well. That's just the big pieces there. But the first piece is there is some tax advantage there. Now, do understand this: that 529s are done at a state level, so each state has their own 529 account or accounts, multiple potentially providers as well on top of that. So when it comes to the state situation, being that we have people from multiple states, please always talk to your tax advisor before making any major decisions. While we can help guide you a little bit, we're going to keep this mostly at a federal level today. But there could be some state savings you could get with their deductions by making contributions to a 529. There is nothing for federal though. So if I put X in a 529, am I going to save any money on my federal taxes? No. And at this point in time, that is not it. These are state-driven situations there. The big reason was it was named after a Internal Revenue Code because simply put, the Coverdell was the only thing that was available prior to the 529. And what ultimately started to occur was that the IRS realized with a whopping $2,000 a year contribution, they weren't going to audit people based on these accounts, but they knew that they weren't really maybe always being used for the right things and stuff like that. So they cut the contribution levels very low, put the funding amounts that you care that, and then your income levels they cut, and then the 529 kind of became the only thing available for somebody who was looking to super fund or put large sums of money in for college there at that time, if without giving up basic ownership to the children outright. So when the IRS then said that you could come in and use it to pay for college and related qualified higher education expenses. So it's not just tuition. So this, we're talking room and board, books, things like that. You could pay tuition anywhere. So as far as a college, also you could look at trade schools. You have that ability. It does a 2-year programs, 4-year programs. The 529 isn't just specifically for a 4-year college, and almost everybody can contribute. So instead of buying toys or a $50 card for Christmas, $100 here, you can just say, hey, this is the 529. Make the change. Everybody can contribute to it. So they can even write the depending on where you establish your 529 for. Some have programs where everybody can just go onto the website and put the money right there. So there's a lot of flexibility in the contributions there that you don't have to sit there and track every penny who did what. That's not how the whole thing is designed to be.
Yeah.
Next slide there.
Yeah, I think that flexibility is, key. Again, if you have your older child and that child does not go to college, then you can change that beneficiary to your other child or to a grandchild or whoever.
Or yourself. There's that much flexibility.
Yeah. So again, going back to Cole and his golf history, there's Q schools out there that you can change it to and use the 529. So Cole, maybe that's still on the table for you down the road.
A little late.
Yeah.
There's even things in our industry that it would actually can pay for. So hire on looking to get qualifications and things like that. So figuring out how to do it's a little different sometimes, but who to pay and what to do. But there's a lot of things that a 529 can pay for even outside of college. So a lot of people say, oh, I don't think my child's going to go to college, I don't want to deal with that. Well, they're going to do something. Are they going to go to a trade school, whatever it may be? There's a chance the 529 will pay for that as well. So what can you, if you just take a distribution from a 529, and believe it or not, even though that these are not sponsored by the IRS, they're all state sponsored, the IRS does though look at the earnings and what they can do with them as far as being taxed or penalized or not. So understand that they still oversee, they just don't the run, let's put the plan itself there. But the first thing is that this is new. They used to be that 529 did not pay for anything but what they called higher education expenses. Now they do allow an exemption for the K through 12. I want to just say, before you take money out of a 529, it is very state specific in regards to this, though, because there could be a potential if you use this for the K through 12, you may be losing some of your benefits that you've got previous to the state. or things of that nature. So always talk to a tax advisor if you are going to be using, or at least run it through your financial advisor first and see what their thoughts are before you just go and take money out to pay for K through 12 tuition from a 529. So it is new. It's only been the past couple of years, and not all states have adopted the same rules that the federal government has with the specifics on that. The big one, obviously, is college. It's the one that we've been talking about all day today. Graduate school. So 529s can be used to be paid for, your undergrad. You can do a 2-year degree. You could also do a PhD. You can do anything. So anything that's higher education as well on top of it. Pretty much if it's education based, there's a good chance that it can be used to pay for it. So if your child's thinking about going back for their master's, if they don't use all the money in their undergrad, guess what? You can still continue to use it for those programs as well. Sometimes if that is the plan, I'm sure Cole would attest, if the plan is automatically for your child to become a lawyer, doctor, or have additional planning. That's something that we want to hear about early on, because there's definitely a lot more financial aid. I think Cole will attest to the undergraduate world. Once you get into the graduates, it's pretty much you're funding it on your own. So that would be one thing that for us, the financial planning side, we'd want to know ahead of time if that is something that is being planned for. Obviously, universities, trade schools. If somebody wants to be an HVAC technician, plumber, electrician, those things as well can be paid for as well, both private or public. It does not matter, and in or out of state. Now, when we say in or out of state, again, this is all from a federal level. There are some programs in states that you kind of test that you will go to a state college and they will give you certain benefits up front. But again, so just before opening an account, make sure you're looking at the state side too, because that is where you're going to get your current benefit for contribution. But as far as taxation on earnings, things like that, the IRS does not care what state you apply to or where you go to school at.
And I'll just add to that, for the 529, you can open an out-of-state 529. So for example, California, we get no tax break at the California level for residents. So I can go open a Arizona 529 or Utah 529 plan because maybe they have better investment options or they're lower cost or whatever. You're not required to open the 529 in the state that you reside. But again, you know that what tax breaks you may get from that state.
Arizona, you can open one in any state and get state tax break. So it's specific on the school. New Mexico, my friend just had a child where he knows his child is probably going to go to school in New Mexico. They do have it, and if you use their program, they have really beneficial things that if you go to a school in New Mexico. So again, it's very hard to know where you're going to live 18 years from now if you start the year that your child was born for funding these. But those are the things that you kind of want to. If you think that you have an idea of some of the things, your state, always start with your state, with your, just to see what they offer. And then from there, like Mike said, California, nothing. All right, fine. We have everything is an option. Arizona, same thing. But, some states do have some, if you contribute to this 529, it has very beneficial things that could happen if you go to a state school. It just depends.
Right. Thanks, Justin. Chad, you want to bring us home?
Yeah, guys. So, really up on the screen, there's actually a question on this. So as much as I kind of perfect segue into the Q&A, we have a number of questions, a few with thumbs up that I'll actually start with. But one of the questions is, I joined late. So is there any way I can see replays for this? And is there anybody I could reach out to for assistance with college planning? So kind of the best resource right here on the screen, very top, you have both our team and Cole Duncan. He is not affiliated with BFSG. He's here as a guest for us, doing a huge favor for all of our clients and doing this presentation for us. So again, thank you so much, Cole, for I think what's a really educational session today. I also posted in the chat box a number of things. One is a link to a 1 to 2 minute survey. Let us know your thoughts on today's presentation. There's a link to the PDF slides from today's presentation for any of you who just want that as a resource for you to download. And then also a link to BFSG University on YouTube that houses kind of every single webinar plus additional content that we've produced in the past. This one will be loaded by the end of the week. You can also use the registration link for an on-demand replay within 2 hours of conclusion from today's presentation, if you would just like to revisit this entire session on your own time. With that, let me get into the first couple of questions that I see a thumbs up here. And I'm going to do the first one, I think, is right up Cole's alley. So the question is, can you be objective with this one, Cole? Is what are the best practices to use when interviewing a college planning specialist to hire?
I can be objective. So how I'll respond to that is there's different types of college planners. Okay, your typical, college coach or, college planner, they're mainly going to be working on a student level. They're going to be helping a student with, looking for schools. Some are maybe helping with the applications. Some may be providing assistance with the essays. Some provide SAT prep. And so they're typically geared mainly towards the academic side of things. But there are, kind of few and far between, and this is where we fit in, where we're combining the academic portion of the program with counseling and college searches, but we're also combining that with a financial component of the program. And so I think the first thing to establish is really what you feel you need help with. Is it mainly student-based? Are you looking to, possibly identify opportunities to save money and, find the best aid opportunities if budget is a concern? But I would say talk to a few, get an idea of what they're providing, their experience, how long they've been doing it. Because like I said, they're not all created equal. There's some folks out there with a tremendous amount of experience. And there's some folks out there that kind of do it on a surface level, so to speak. So I think that's how I would answer that.
I do want to add one piece to that. I think one question to always ask is, how are you compensated? Would be the question that I would really ask, because no one does anything in this world for free. And if they say, oh, we do this for free, there's something going on, because there's an underlying intent somewhere along the line. So that is a big piece. If they're funded by a school, okay, that's fine. But if you have somebody that is in an office and sitting there and says, I do this for free, that can't be. There's something underlying. So they might own, work on a company that's a nonprofit, but somebody has to be funding that situation. So maybe they're trying to see your assets so they can then get you to invest with them, or trying to refinance your house. I've seen it all. So understand that would be one question that I would always ask every time. And if it is, we're free, there has to be something more, because there has to be a funding source somewhere along the lines.
Yeah, I like it, Justin. It gets back. There's an old adage I heard a long time ago: is if it's free, you are the data.
That is correct. That is normally what is happening. If it's free, they are trying to find out what to do, what else they can do for you that you can pay them for.
And I would tell you that a typical college planner, some of them are just charging exorbitant amounts of money for services. We have some here in the Bay Area that are charging $5,000, $6,000, $7,000, $8,000 for a program. And I would shop around and see exactly what they are providing to you for that type of money.
So the next question is, what metrics do you guys use to really, or do the schools use to grade themselves on how easy or difficult it is to get required upper division courses?
I wouldn't tell you it's a metric. I would tell you it's school specific. For the Cal State system here in our state, you can go on their websites and figure out what programs are impacted. Depending on on the student's major, what schools they're looking at, and really start to understand what those schools look like. But it's more of a school by school basis. Again, speaking from California, the CSU system here, Cal State universities, they're more impacted than any other system. UCs are, mildly impacted, but when we get to private schools, usually those are four-year colleges. So when we go to a public school, usually a student has to be a lot more resourceful to get done in 4 years. The graduation rate in 4 years is 20% at those schools, whereas we have much higher percentages at the private. So it's a little hard to speak to that in just I guess kind of a broad manner. I don't know what state you're in or what schools we're speaking of.
Yeah, and that I can attest. I mean, we had a neighbor. She just graduated from San Diego State. It took her 5 years. I mean, that's just because of being impacted.
Yep.
Yeah, so next question is, just thinking about back to FAFSA, is the non-custodial parent eligible for Parent Plus loans if they are not included in the FAFSA?
To my knowledge, yes. The thing I would talk about the Parent Plus loan is it's not a great loan program. There's the interest rate on that one's it's pushing, I believe right now it's pushing 8%. A lot of parents get caught up in that loan program because they're not really completely clear on how it's going to play out. And the reason I say that is the way that loan is structured is it's a 10-year term on the loan. So when you go in year one, you take your first loan, it looks totally doable. But then you have to go back at the next year in year two, take out another loan, your payments just doubled. And then you got year 3 and year 4. If you have a second child coming behind, those payments can get very absorbent very, very quickly. And a lot of parents get kind of back themselves into a corner on that. So I think the important thing is I would say there's more cost-effective ways to borrow money, whether that's on a student level, there's whether it's on a personal level from a bank, just to kind of looking at all of your options. I know that's a very popular federal parent loan, but it's not always the best way to pay for a college education.
Good answer.
So
Next one.
To answer your question, Guru, too, Cole, I think you're spot on. So because eligible parents is what they say can apply for these loans. Biological is obviously the first step there, but legal or adoptive. Now, that's probably one thing that we didn't cover today, but if there is that a situation that applies to a child, that might be something you want to ask some questions about, because they may qualify on their own for financial aid, where they or something along those lines. So, but just to let that know. But as far as they say, you have to be considered a parent or a step parent on the FAFSA, but the application process is completely separate. As far as I know, I've never seen them make you actually do it to apply for the loan.
So next question, guys, is in a 50-50 custody situation, think where one parent is in school and the other parent is working with an above average income, and 2 college-age children. Would it make sense to do all the FAFSAs using the parent that's in school, using their income today?
I mean, at first glance, I would tell you absolutely.
Right.
But I would also, have they ever filed a FAFSA before? Has any information ever been disclosed? Do those parents live in the same town? Whose address is being used for the community college or was used for the high school? So it's not quite as easy as cut and dry, but at 30,000 feet, I would say yes, that makes a ton of sense. Just a matter of kind of how everything lines up behind it.
Yeah. Good answer. So next question is up to 5 to 9 plans now. Are they taken into account when applying for FAFSA?
Correct. They're disclosed as a parent asset. So which is better than a student asset. One of the things that the accounts that you had talked about, UGMAs, those are considered a student asset, and it's custodial money, and that is an account that counts against in the financial aid equation at 20 to 25%. So if we have 100 grand in a 529 versus 100 grand in a net UGMA, this one counts against at about $6,000 adding to your number. This one adds $20,000 at a FAFSA school and $25,000 at a profile school. So it's also important to understand how those impact your financial aid equation, as far as establishing which one's going to be most advantageous.
Cool. What if grandparents open up a 529?
That's fine.
Does the parent then have to report the assets, or could it? Okay,
Nope.
That's what I was saying.
Nope.
We got to work around there.
It doesn't have to be reported until that money starts arriving at the college. So if we're getting need-based aid, then sometimes it's most advantageous to use that money late rather than early, because then we have to report it the following year because the money is being distributed.
And Cole, do you want to touch on the new FAFSA form, which continues to get delayed? Because that was maybe looking at.
I'd love to talk about it, but I've never seen it. They keep talking about it. They said 2 years ago they were going to eliminate the multi-student discount. That was supposed to go into effect in 21. Then it was 22. Now it's out to 24. There's a lot of changes. I think the Department of Education kind of bit off more than they could chew. And so everything that they've talked about changing, they talked about changing the EFC to the student aid index. All of this stuff keeps getting pushed out. So until I see it, until I understand, what they're actually going to be able to roll out, there's not a lot I can offer on that subject.
Yeah, and as far as grandparent 529s, going back to Justin's question, I mean, they are counted and they are part of the FAFSA and the CSS profile as well. There was rumors again with the new FAFSA form where maybe grandparent 529 assets wouldn't be counted in that, but as of today, they are counted.
And you guys, just for that, I did just post in the chat box a link to, again, another blog post that we did on how these 529 plans could impact your financial aid situation. So the next question we have, and this one I know you did address, but this person missed unfortunately a very small segment of the discussion, is can you, Cole, again, talk about when somebody should really start engaging a college advisor? So I think you talked about historically it was kind of juniors and seniors, and now you're kind of seeing it dip down to even freshmen and sophomores as the planning becomes more and more important.
Yeah, I would tell you that senior is way too late. At the latest, I would tell you a comfortable time is first semester junior year, optimally sophomore year. And the reason I say that is a lot of students don't know where they want to go to school yet. They don't know exactly what they want to study in college. And so in order to go through kind of a comfortable natural progression on an academic level for a student, having that additional time, because if we waited all the way until, let's say, second semester of junior year to really start on that, it's a very stressful process for students. They're starting to make real life choices, and they've never had to do that before. And so if we have a student who's really unclear of what their future looks like, and we start late, it's a lot of big decisions that happen very, very fast. And sometimes that can be a little bit paralyzing for a student. And so if we're able to start sooner on, in those career searches, in the college searches, they can go through more of a natural progression, because, summer before senior year, we're already working on essays. We're still doing college visits. Applications are going to be due in October, November. So I would tell you just the earlier, the better. Freshman and sophomore year is a great time to start.
So next one we have is, and this goes again back to what qualifies for 529. Does a college / institution need to be accredited for it to qualify for 529 funding? Or, I mean, maybe if not, is like, what are the requirements that these institutions need for you to be able to use your 529?
Cole, do you want to take that one, or do you want to take that one then? Accreditation for colleges and the IRS accreditation is not the same as accrediting a college, so they do not run hand in hand completely. So just understand that one does not to the other. Now, an accredited college, like let's say a college loses their accreditation, things can change with those as well. But I would say that there's accreditation for 529 for the IRS distributions, and then there's also the whole other side of the colleges that do that. So the big thing is making sure that if you don't get a what's called a form 1098T, which is a tuition payment from the college that you pay it to, the IRS must, for the most part, probably does not see that as a accredited university, because they're not going to give any benefit there. So that's after the first year. That's one way to telltale slide. Did you get that form to say I paid this much in interest? I can write it off on my taxes. That is there, but the college accreditation and 529 accreditation and the IRS are all a little bit different, but they do somewhat have the same benefit, the aspects behind. Not complete.
So I guess because I mean, I didn't even know there was such thing as an IRS accreditation myself. So when you kind of think through that real quick, like the fact that a university or institution's accredited for all intents and purposes is irrelevant in thinking about whether a 529 can be used.
That is, so the
What is
IRS wants it to
question they
be,
would look for?
the IRS is looking for an eligible education institution. That is what they call it. For them to have that, they will then issue a 1098-T when you go to school there. But they are, you can ask the school if they are, but that is the accreditation is not what they're looking for. It's, they fall under what the IRS's definition is, an EEI, or an eligible education institution. That's what you're looking for there.
And I think the other important thing is the assets in a 529 have to pay for qualified higher education expenses. That's the key word, is qualified. And so again, just put it up on the slide here, showing some of those things: tuition, books, supplies, room and board. There's some caveats, again, must attend at least half-time, but those are considered qualified higher education expenses.
I'm going to post a link. There is a database of accredited post-secondary institution and programs. It's actually ran by the government of the US. Now that can change from time to time, but if they're not in that list, I would say that they're not going to get any, you're not going to get the 529 distributions would probably not work from that. So.
Okay, so next question, guys, is what are the best value community college transition to four-year college financial programs that any of you might have come across?
Well, community college in general is a tremendous value. You know, it's here in California, we have the California Promise program. So it's actually free to go to community college for 2 years right now, as long as the FAFSA form has been filed. That's going to be state specific based on what programs are out there. But community college is a great way for a student to, you know, take care of their general education credits and transfer those into a four-year college, save some money for 2 years. But I think one thing I would note there is, you know, here in California, again, that the UC system is a tremendous supporter of the community college system. And it's in, you know, there's certain programs that guarantee acceptance to certain schools. So it's important to really understand what those programs are. But before we get to a community college, it's also important to know exactly what schools the student is planning on transferring into. So while they are at community college, they're taking all of the right classes so they can bring all of those units with them when they get to that four-year institution. If they take the wrong classes at a community college, then rather than transferring 60 units into that school, maybe they can only bring 40 of them with them. And that means they're going to have to be at that four-year college, which is costly, for an extra semester or two to make up those credits.
Yeah, personally, I went to community college and then transferred to UCLA, but I was trying to go to either Berkeley or UCLA, and there was certain schools weren't accepting certain classes. I had to take different ones for my major. So yeah, that's important to know. And some community college, at least this is how it used to be called, maybe they're feeder for certain. I mean, like, remember Santa Barbara, there was the local community college, and I think they accepted more kids from that community college to go to UC Santa Barbara than some other community college down in Orange County or San Diego or something like that.
Correct. And the same for Cal Poly SLO. Cuesta is a feeder to that school. But the other part of that is, you know, one of the great things about community college is you save money, right? Because the student's living at home. But if we go to Santa Barbara to go to City College, we're probably still going to spend 15 or 20 grand a year on living expenses and, you know, everything else that comes with living away from home.
Yep.
I know in Arizona we have this situation too, and we always run into this with now this varies by state, but it's also varies by financial aid packages from the school. There was a for underprivileged children that there was a 4-year degree, but you had to be right out of high school and only going for 4 years to college, to a 4-year college. So granted, there could be little exceptions, but I would definitely look into what the overall plan is and what's available before just scratching the 4-year institution right off the list. You know, where, oh, you're going to community college, you could be foregoing some potential things out there. So just look before you make any look what's out there before. Then I would say work with somebody before you make any final decisions on what you're going to do there.
So this is, at least for now, the last question I have, unless another question comes in, and it is revolving the public service loan forgiveness program. So I'm actually going to turn it into, I'm going to add a piece to this question though, because I know it's very tricky to make sure you fit certain very specific requirements to even qualify for that public service requirement after 10 years. And a lot of people just mess it up because they're not on like the income-based repayment program or whatever it might be. So can you first address some of the things that people should be on the watch just to even qualify for that in the first place, even if it's just undergraduate? And then this question specifically applies to they're looking to apply for their master's degree and looking for resources. And do you have any thoughts on how this public service loan forgiveness program works for graduate level students?
I have a little bit cold. Did you anything you wanted to add to that, or just? So first and foremost, this is a tough one. It's not in a bad way, but the first thing is to understand. Let's just from a perspective, if you have anything over a undergraduate, you are going to be funding it on your own. So to get there. So most people, they want to go get their master's, like they use loans, whether they're private or they are subsidized. Well, there's no subsidized federal loans, unsubsidized federal loans for master's programs. Those are going to be your only options. So chances are when you leave with your master's degree, you will have some debt. And at that point, it's what is the best repayment option there for you? And one of them obviously is the availability for the public service loan. A lot of that just depends on, first off, does it fit what you're trying to do? I have a good friend that's doing it. She's 1 year away now. So but you got to be careful because you could derail it very quickly. As Chad said, reporting is the biggest thing for the federal government when it comes to these forgiveness programs. Everything has to be reported along the way. And if you make a mistake, unfortunately, there's not a lot of forgiveness in it. So the federal government, I know, has come out and said that they were going to make this easier. That was their goal. But we have not seen a lot of action behind the initial, let's call it the press briefing side of it there. But it's there for a reason. If it fits what you're trying to do, it's a great situation. Just make sure that you work with and you have to work with your employer too. Reporting is the biggest piece when it comes to those, but it's there, but you got to make 10 years of payments to get there.
Yep. Awesome. Thank you so much. And so I did actually just get one more question that came in, but it's actually something that's going to take a post into the chat boxes. What is the website that you can look up 529 eligible expenses or educational institutions? So I did just post it. Mike gave me a link to the article, savingforcollege.com, and there's an article that basically says, what can you pay for? So for anybody looking for that resource, please check out, pop up the chat box real quick. You should be able to click it, open up in your browser to view once we finish today's session. And so that was our last question. Gentlemen, any closing remarks today as we conclude?
No, start early. And it's Cole, thank you so much for helping us out today.
Of course. Thanks so much for having me.
Yeah, thank you, Cole. Very educational session today. Justin and Mike, thank you so much for your time today. And everyone left on the line, thank you so much for tuning in today. We hope you enjoyed today's session.